Hello, 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 hello. Welcome to our next part, that is your PGBP adjustment. So I have tried to include all your PGB adjustments in one sheet itself so that you only have to refer this during your exam. So let's start. So we divided into two parts, that are items that are not allowed or that you have already subtracted and they need to be added back. And the ones in the green are items allowed. That means you will get a deduction or anything that has to be subtracted. Okay. So we will start first of all with items not allowed or items that have to be added back. So any undervaluation of closing stock, if your closing stock has been undervalued, the portion by which it has been undervalued, that amount has to be added. Overvaluation of opening stock. So closing stock and opening stock will always go hand in hand, but in the opposite direction. So if closing stock undervaluation is being added, opening stock overvaluation will be added. Next, any advertisement in brochure of political party, advertisement in brochure of political party and payment to electoral trust by check, payment to electoral trust by check, both of these items will be added. Do not get confused, sir, but we get a deduction for this, right? Exactly, you get a deduction for this under section 80 GGB and 80 GGC. Therefore, while calculating your PGBP income, these items are not to be subtracted. Therefore, if you have already subtracted this, these items will be added back because there is a separate deduction for this under section 80 GGB and 80 GGC. Next, penalty for delayed filing of return, because this is a breach of law. Any breach of law will not be allowed. So penalty for delayed filing of return, deduction will not be allowed. Any compounding fees that you have paid, that is also a breach of law, hence that is not allowed. Your direct tax, so everything related to income tax, so any taxes, any interest, any penalty or any cess with regards to direct tax will not be allowed. I've also made a summary down of bifurcating what is allowed in direct tax and what is not allowed in indirect tax. So that we will also check. But for now, you have to remember anything related to direct tax is not allowed. Next, expenditure on issue of rights share. So any expenditure that you do that is capital in nature will not be allowed as deduction. So because when you issue rights shares, your capital increases. Therefore, in such a case, this expenditure will not be allowed as a deduction. Next is your IPO or FPO of share expenses. That is your initial public offer or your further public offer on shares expense, that will not be allowed because that is also capital in nature. Expense for increasing the authorized capital. Now, expense for increasing authorized capital, again, the same logic, it is capital in nature. Any expenses on abandoned project, expenses on abandoned project will not be allowed because this is capital in nature. Franchisee fees paid. Franchisee fees paid will not be allowed a deduction. Why? Because franchisee fees, if you remember, this is a type of asset. So this is your fourth type of asset and you get a 25% depreciation on this. So therefore, the entire franchisee fees will not be allowed as deduction. That will have to be added back. And only 1/4 or 25% of the franchisee fees will be allowed as deduction. Next, tax paid by employer on non-monetary benefits. If your company gives you any non-monetary benefits, say for example, they sponsored your trip to Thailand. Now, such a case, since they sponsored the trip of Thailand, this amount is also taxable in your hands in the nature of perquisites. But if the company does not want you to pay tax on perquisites, therefore, what will they will do? They will also pay tax on that portion also from your side. So any tax paid by the employer on non-monetary benefits will no deduction will not be allowed because that is in the nature of a direct tax. Loss due to destruction of plant and machinery. If you have any loss due to destruction of your plant and machinery, that will not be allowed as deduction because that you will be subtracting from your block of assets. You will be subtracting from your plant and machinery block of assets. Any amount paid to employee welfare trust, amount paid to employee welfare trust will not be allowed as deduction. Industrial power tariff concession received from the government. If you received any concession from the government, if you received this concession, you will have to add this back because this is basically a kind of income. Provision of any kind. So any provision will not be allowed as deduction unless I have mentioned it in the green box. So unless it is mentioned in the green box, this green box we will be studying right now. But what you have to remember is any provision will not be allowed. Any interest payment to cooperative bank post the ROI due date. So if you made any interest payment to the cooperative bank which is after the ROI due date. So this was due, but you did not pay, but it is now after the ROI due date. Therefore, this will not be allowed as deduction. Interest under section 234B for short payment of advance tax. So this we will be covering under advance tax chapter, but for now you have to remember any interest that you paid for short payment, any interest that you paid for short payment of advance tax, that comes under section 234B. That will not be allowed as deduction. Interest on loan taken for the payment of income tax. Again, this is in direct tax nature. What you have to do, what you did, you have to pay direct tax of say rupees 1 crore. You do not have 1 crore, so you took a loan for this. Now, when you took a loan for this, you will pay some interest on this loan, and because you took this loan for payment of your direct tax, this will not be allowed as a deduction. Any discount that you have given to creditors or waived off will not be allowed as deduction. Say, for example, your creditor owed you 100 rupees, and you say, sir, instead of 100 rupees, you just pay me 80 rupees. 20 rupees I am giving you as a discount. I am waiving it off. This 20 rupees will not be allowed as deduction. Excess amount of purchase over market value. Say, for example, you purchased a machinery for 120 crores, but let's not take an example of a machinery. Say, for example, you bought some materials for your business whose worth was actually 100 crores, but you paid 120 crores. You paid excess. So in such a case, the excess amount of purchase over the market value will not be allowed. That is, in our case, 20 crores will not be allowed as deduction. Payment in cash exceeding 10,000 per person per day. If you paid for anything, in cash which exceeds 10k per person per day, that will not be allowed as deduction. Payment in cash exceeding 35,000 in case of transporters per day. So this 10,000 limit is increased to 35,000 limit in case of transporters. Next, sales tax not refunded to customer out of refund. So if you received any refund and you did not refund this back to the customer. So say, for example, you received any sales tax refund. Now this is not actually in your pocket. This should be refunded to the customer. But if in case you did not refund this back to the customer, we will add this back. We will add it. Contribution to employee pension scheme. Now any contribution to employee pension scheme is actually allowed, but anything in excess of 10% of basic plus DA will not be allowed as deduction. So anything in excess of 10% of basic plus DA will not be allowed as deduction. Very important is your CSR expenses. CSR expenses, even though that are mandated by law. CSR expenses are mandated by law, but income tax says that this is not for your business purpose. Therefore, we will not give you deduction for this expense. So CSR expense, even though it is a mandatory requirement for some companies, you do not get a deduction for this amount. Any development charges paid for capital asset, any development expenditure that you have done on capital asset, that will not be allowed as deduction, but that will actually be added to your block of assets. So therefore, this will be added to block of assets, and this does not have to be reduced. So if you've already reduced this amount, you have to add this amount back to your PGBP income. Any expenses on transfer of carbon credit. Carbon credit is taxed at a special rate. Therefore, any expenses with regards to this will not be allowed as a deduction. Expenses not related to business. Of course, now any expense which is not related to business, you will not be getting a deduction for that. Next, 30% of fees paid to non-executive director or independent director without TDS deduction. So 30% of the fees paid to non-executive director or independent director without TDS deduction will not be allowed as deduction. So only 30% of it. Next, 4/5 of your VRS compensation paid to employees, that is your voluntary retirement scheme. So any amount, say for example, you paid 20 lakhs as voluntary retirement scheme to employee. Now in such a case, the entire 20 lakhs, we will not be allowing your deduction straightforward. We will be allowing you 20% each year. That means we will be allowing you 1/5 of the expenditure each year. So therefore, 4/5 of the amount will have to be added back. If you subtracted the entire amount, 4/5 of the amount will be added back. And if you haven't subtracted anything, 1/5 of that amount will be reduced from your PGBP income, because that is the expenditure deduction that we allow. Any amount spent out of NABARD, any amount that you spent out of NABARD account, if it is not permissible. So if the amount that you spent out of NABARD, so NABARD account specifies certain places where you can use this amount. But if it is not been used there, this amount will be added back to your PGBP income. Any mark to market loss, which is not as per ICDS will not be allowed. We will be covering ICDS also. Any commission paid to doctors, will not be allowed, because as per the law of doctors, paying commission to doctors is not allowed. Therefore, this is considered as an illegal expenditure. So because this is an illegal expenditure, we will not allow you deduction for this amount. Any illegal expenditure in or outside India will not be allowed as deduction. Any additional depreciation deduction you will not be getting if you opted for section 115 BAA, BAB and BAC. So if you opted for any of these three sections, that is BAA, BAB and BAC, in such a case your additional depreciation will not be allowed. Any retrenchment compensation, this is a very important point, because any retrenchment compensation, if it is on closure of business, it is not allowed. But retrenchment expenditure on closure of some units will be allowed. Over here, if you see, we have defined it as some units. So if there is any retrenchment compensation on closure of a business, it is not allowed, but on closure of some units it is allowed. Any STT or CTT paid if security is a capital asset. So any STT or CTT, that is your security transaction tax or a commodity transaction tax, if that security is a capital asset, in such a case this STT or CTT is not allowed as deduction. However, if your STT or CTT is a stock in trade, then it will be allowed. So therefore, what you have to remember, if it is a capital asset, then it is not allowed. If it is stock in trade, it is allowed. Any excess payment made to relatives, say for example, you hired your wife in the business. Now her ideal salary would have been 10 lakhs, but you are paying her 18 lakhs. In such a case, the excess payment, of 8 lakhs that you are paying her, this will not be allowed as deduction, and this will be added back. If you subtracted the entire 18 lakhs, 8 lakhs will be added back, and only 10 lakh deduction will be allowed. Next is your very important section of TDS, that is under section 40A IA. Remember this section carefully. So under 40A IA, if you have deducted but not paid till the ROI due date, you deducted the tax but you did not pay to the government up till the ROI due date, if the person whose TDS you had to deduct, if that person is a resident, so if that person is a resident, limit will be 30%. If that person is a non-resident, 100% will not be allowed as deduction. So if say for example, I am an employer and I'm paying salary to my employee. So if my employee is a resident, so I deducted his tax, but I forgot to pay it to government till the ROI due date. In such a case, 30% of the amount will not be allowed as deduction, because that person is a resident. However, if that employee was a non-resident and I forgot to deduct tax, in such a case, the entire salary amount will not be allowed at deduction. Therefore, 100% of the salary will be disallowed. Okay, next, if it is not deducted, not paid till the ROI due date, that means I didn't deduct, and neither did I pay to the government. In such a case, the government gives me two options. That is, if the recipient is a good boy or a recipient is a bad boy. This good boy and bad boy is my terminology. Do not write it in the exam. So if the recipient is a good boy, that means the person whose tax I had to deduct, that is the recipient. So if that person is a good boy, now who is a good boy? Who has furnished his return under section 139(1), who has included the above income in his ROI, that means the income on which I forgot to deduct TDS. If that person has included that income in his return of income, in his ROI, and if such person has paid tax on such income, if he has followed all three of these conditions, he is a good boy. So therefore, nothing will be disallowed. That means because I have deducted, because the recipient is a good person, he has done all three of these, nothing will be disallowed to me, everything will be allowed. But if the recipient fails to do either of these, that means if he follows any 2 out of 3 conditions, or if he does not follow any one condition also, he will be termed as a bad boy. And therefore the same rules of 30% and 100% will be there. That means for non-resident it is 100%, and for resident it is 30%. Now this is just a small summary that I put over here. So for direct tax, your taxes, interest, penalty, everything is not allowed. Therefore, it is in the red box. So for direct tax, in taxes, interest, penalty, nothing is allowed. But for indirect taxes, your penalty is of course not allowed over here also, because that is considered as a breach of law. but your taxes and interest will be allowed, provided you have actually paid it to the government. So therefore, only on the basis of section 43B. 43B means talks about deduction on basis of payment. So only and only if you actually made the payment, actually the amount has gone out of your bank, only in such a case these taxes and interest for indirect tax will be allowed as a deduction. Okay. Now we will go to the items that are allowed as a deduction, items that are allowed to be subtracted, or items allowed or they have to be subtracted. So as we did, undervaluation of closing stock has to be added. So therefore, overvaluation of closing stock will have to be subtracted. Similarly, for overvaluation of opening stock, so your closing stock and opening stock move in opposite directions. What you have to see is advertisement in brochure of political party by company. Any advertisement in brochure of political party by company will not be allowed. Now, what is the difference over here? Get studied advertisement in brochure of political party. So, if the advertisement in if the advertisement in brochure of political party is by company, in such a case this will be allowed, but if it is not a company, then it is not allowed and it will go under section 80 GGB, because 80 GGB does not allow any advertisement expenditure by company. So therefore this will be allowed, because this is not allowed under section 80 GGB. Next, franchisee fees paid by director. Any franchisee fee paid will be allowed as deduction, but depreciation portion of 25%. So as we were discussing before, your entire franchisee fees will not be allowed as deduction. Only 25% by way of depreciation will be allowed. Any scrap income on sale of plant and machinery which were destroyed. Any scrap income on sale of plant and machinery which was destroyed. Next is 1/5 of your VRS. So as we were discussing for voluntary retirement scheme, only 1/5 will be allowed, and in 1/5 of any amalgamation or demerger expenses. Amalgamation or demerger expenses, entire amount will not be allowed. Only 1/5 of the portion will be allowed. Any premium on health insurance of employees. Any premium on health insurance. So if I am a company and I am paying the health insurance premium of my employees, in such a case, this deduction will only be allowed if it is in means other than by way of cash. Therefore, over here, cash has been cut. So it has to be through any other way, but not cash. Payment in cash exceeding 10,000 to fishermen or farmer. So that 10,000 limit that we studied of 10,000 per person per day, that will only be allowed only if that person is a fisherman or a farmer. Any mark to market loss as per ICDS. So if it is not as per ICDS, it will not be allowed. If it is as per ICDS, it will be allowed. Any income tax refund and interest. Any income tax refund. Say for example, if you had to pay an income tax of say rupees 1 lakh, but you paid income tax of 1 lakh 10,000. In such a case, 10,000 refund that you get back, this does not have to be added. This is not your PNL item. This 10,000 rupees does not have to be added to your income. So if you have already added it to your income, please, the department says subtracted. This is not your income. This is just a refund. So this refund has to be added back. Has to be subtracted automatically if you have already added. And interest will not come under PGBP. It will come under IFOS. So under IFOS, if you remember, there is also 50% deduction under IFOS. Next, expenses on issue of bonus share of buyback. Now, sir, you told us that whenever my capital changes, all that expenses are in capital nature. So why is this allowed? Because when you issue bonus share or when you do buyback, if you remember, you transfer some amount to your capital redemption reserve, that is your CRR. So you either use some amount from that. So therefore, that amount remains same of how much you bought back versus how much you transfer to your CRR. So therefore, in such a case, this is not a capital expenditure and this will be allowed as a deduction. Very, very important point. Next, any interest on loan taken for capital asset after it is put to use. So if you've taken any interest on loan for a capital asset, so this interest, so once the capital asset has been put to use, any interest up to the date of put to use is capitalized to the asset and added to the block. But any interest on loan taken for capital asset, that is after put to use. So after put to use period, that amount of interest will be allowed as a deduction and you can reduce it from your PGBP income. Any loss by theft, if it is incidental to business, we will allow you as deduction. Over here, what do we see? It is employer contribution to EPF paid before the ROI due date. So employer contribution to EPF will be allowed as deduction only if it is paid before the ROI due date. and employee contribution to EPF paid before the PF Act due date. So what you have to remember is employer contribution. If it is employer contribution, he has to follow the due date of ROI. But if it is employee contribution, then the due date becomes your PF Act due date, that is the Provident Funds Act due date. Next is your ZCB, that is your zero coupon bond. So under zero coupon bond, what happens? You issue a bond for 80 rupees and you redeem it for 100 rupees after 2 years. So in such a case, this 20 rupees is the hidden interest that you are paying. So in such a case, this 20 rupees is allowed as a deduction over the tenure of the bond. So in such a case, our tenure of the bond was 2 years and 20 rupees was allowed as was the interest that we were paying. So in such a case, 10 rupees interest per year is actually your expense. Next, legal fees incurred for defending title of factory. Any legal fee that you have incurred for defending the title, that means to prove that yes, this factory is mine. In such a case, that legal fees will also be allowed as a deduction. Below expenses are allowed only if actually paid. That is your section 43B. So section 43B specifies certain expenses which should be allowed as deduction only and only if you have actually paid those expenses. So any bonus or commission paid to employees only allowed on payment basis. Employer contribution to your SPF, RPF, AGF, ASF, etc. All of these are only allowed. So what you have to see is this is your employer contribution. Any interest on loan taken from your scheduled bank or NBFC. This is a new addition in this attempt. So any interest on loan taken from your scheduled bank or NBFC is allowed as deduction. Leave encashment allowed as deduction only on payment basis. Next is your purchase from micro and small enterprises. So purchases from micro and small enterprises. So why this becomes important? So if there is an agreement, it is the agreement date or 45 days. And if there is no agreement, then this payment should be made within 15 days. This is also an amendment, so please make sure you remember this. Next is any indirect taxes, duties or cess. Indirect taxes, duties, cess. If you remember that table we have done, this is the same point. 43B is not applicable if paid up to the ROI due date. So if you paid it up till the ROI due date, all okay. But otherwise for indirect taxes, duties, cess, it is only allowed if it is on payment basis. Over here, if you see, I have not written penalty. Penalty has not been written because penalty is not allowed as a deduction. So anytime you get confused, please make sure you just see this report of yours and you are good to go. Any loan repaid which was converted from arrears of interest. So say for example, my every year I had to pay 10 rupees interest, and now this has accumulated to say for example 200 rupees over so many years. So what did I do? I told them that sir, I have to pay you 200 rupees. Let's make this into a loan. You charge me interest on this and we will treat this as a loan now. So in such a case, this loan that I will repay, any loan that you repay, what do you think? It is a principal nature and you will only get deduction for interest amount. But over here, this loan was actually just a compilation of all the interest. So therefore, you are basically just paying off interest. So therefore, this loan repayment will also be allowed as a deduction because you are actually repaying interest. Any gratuity actually paid will be allowed as deduction. Provision for payment to workers estimation on wage and reasonable certainty. So this line will be as it is. If you see this line, please allow it as a deduction. Next is a provision for bad debts. Provision for bad debts, if it is an Indian bank, it will be 8.5% of your GTI. 8.5% of your GTI plus 10% of your average advances by your rural bank. So if it is an Indian bank, it is 8.5% of GTI plus 10% of average advances by rural banks. But if it is your foreign bank, only 5% of GTI will be allowed as a deduction or provision for bad debt. So if you remember, I had told you that no provision will be allowed. So this is your first provision that is allowed as a deduction. Next, commission paid to recovery agent for debt realization. So any commission that you are paying for debt realization will be allowed as a deduction. So if any expense was disallowed in previous year because you forgot to deduct TDS, but now you paid the TDS, so okay, we will give you the deduction. Any payment towards feasibility study conducted for technological advancement related to business, that will be allowed. This point we already discussed. STT, CTT will be allowed if it is your stock in trade. Discount on issue of debenture will be allowed over the tenure. GST interest on delayed filing of return, of course we did the table, so interest also is allowed. That is of course over here also based on 43B. Then profit on sale of land. Profit on sale of land is your capital in nature. It will come under capital gains and not under PGBP. Any grant received from government for asset acquisition. So if you received any grant for the government, say for example to purchase a machinery, in such a case this grant is not your income, so therefore you will be subtracting it from your cost of acquisition and not from your PGBP. Sponsorship fees, if incurred for business promotion, will be allowed as deduction. Expenses for bringing water to where the factory is located will be allowed as deduction. Payment up to 50,000 in cash to employee on retirement. So if the employee is retiring and you pay him in cash, so up to 50,000 will be allowed. Any salary that is in terms of cash paid to person who is not at a normal place of business for a period of 15 days or more. So if any person you sent him for a field visit, so if he's there for a period of more than 15 days, in such a case if you pay his salary in cash, it might be possible that there is no bank at such a place, so therefore if you pay him in cash it will be allowed. Contribution to National Fund for Rural Development allowed. Retrenchment compensation of closure of some units. Remember, on for some units it is allowed. Any bad debts, it will be allowed if it is written off and it was income of some previous year. That means you've included it as your income in some year, but now you don't think that you will be receiving this money, so you write it off, then you will get a deduction. Last part of this expenses is your transfer to special reserve for banks or financial corporation. So if they get a deduction, if they transfer it to some special reserve, now what is that amount? It is lower of these three limits. First is your actual transfer, the actual amount that has been transferred. Next is your 20% of PGBP, 20% of PGBP or 200% of your share capital plus reserve minus your opening balance of special reserve. So with this we are done with your PGBP adjustments, and please make sure you only this is also uploaded on our Telegram channel, this particular sheet. So do remember it, and all the best for your exams.